Massive day for the unemployed. Because the biggest money machine ever built just started to crack. It is the same crack that showed up right before the crash of 2008. And the one person on earth it cannot hurt is the person who was never allowed to borrow money in the first place. That is you, sitting right there. The most diversified man alive, on the technicality that you own nothing. Here is the claim, and Meerkat will back up every word. Right now, about $2 trillion in future payments are owed to Microsoft, Oracle, Google, and Amazon, owed by a small group of companies that have never made a profit, not once. And if your pension is in a normal index fund, and it is, because nobody ever trusted you with anything fancier, then almost half of your retirement is sitting on top of those payments being made on time. It is the same trick the banks built out of home loans in the early 2000s. The same trick that blew up the last time, right before 2008. And it is the same trick the American government is running on itself right now, out in the open, with a straight face. 3 borrowers, 1 machine, 18 years apart. And the joke, the real joke, is that the only person in this whole story with nothing to lose is the one who was never let in the door. Enjoy that. It is the closest thing to a win you have had in years. Let Meerkat explain. But first, some background, because Meerkat does not just turn up at your door shouting about Dominoes. Meerkat has taken up building a model railway, a whole little village on a board in the spare room. Tiny hills, tiny sheep, a tiny train station with a tiny clock that Meerkat painted by hand, nearly in tears. There is a tiny bank on the tiny high street, and Meerkat spent a whole Sunday deciding what interest rate the tiny bank should charge. That is roughly when Meerkat's houseplant staged an intervention. Then the letters started coming, hundreds of them. Meerkat, is my pension safe? Meerkat, my brother-in-law says AI is the future. Is my brother-in-law an idiot? And Meerkat, who wanted nothing more than to paint tiny sheep, put the brush down and read the most boring documents ever made by man. Company filings, earnings calls, one report so long that Meerkat aged while reading it. By day 4 he had stopped cooking and was living on beans on toast eaten standing over the sink, like a Victorian orphan who had done well for himself. Meerkat is not okay. But Meerkat understands the whole thing now, and you are getting it in 3 parts. Part 1. The ladder. A money machine built in the early 2000s out of home loans, built so that no loan is ever really paid off, only swapped for a new one. Part 2. The rebuild. The exact same machine today, except now it wears a hoodie and calls itself artificial intelligence. And Part 3. The stack. The third and biggest borrower hiding under the other 2, the one whose fall would land right on your kitchen table. Sit back. The model railway is not going anywhere, neither are you. Part 1. The ladder. Go back to the early 2000s. The most popular home loan for riskier American buyers had a nickname, the 228. It worked like this. For the first 2 years you paid a cheeky low rate, cheap and easy. Then for the next 28 years the rate jumped to something most of those buyers could never afford. Sounds like a trap. But here is the part people get backwards. Nobody on either side ever expected you to pay that high rate. Not you, not the bank. The plan, and everyone agreed on the plan, was simple. In 2 years your house would be worth more. You would take out a new loan against that higher value, use it to pay off the old loan, and start again with 2 more cheap years. Then do it again, and again, forever. The loan was never meant to be paid off, it was meant to be replaced. Hold on to that line. Meerkat is going to hand it back to you 2 more times, each time attached to something bigger. And for years it worked. By the end of 2006, nearly 4 out of 5 of these loans from 2003 had already been swapped for a new one. The ladder kept going up. Everyone on it felt like a genius, the way you feel like a genius for the 20 minutes after payday, before the bills come out. Then something changed, and it was not what you would expect. House prices did not crash in 2006. Read that again slowly because the whole video depends on it. In 2006, house prices were at their highest ever. What changed was the speed. Prices had been going up fast, in the mid-teens each year. Now they were still going up, just slower, single digits. And in that same year, with prices at record highs, people started missing payments in record numbers. That makes no sense, until you see the machine. Picture a buyer whose house went up 8% instead of 15%. That smaller gain was not enough to get a new loan big enough to replace the old one. The new loan had to cover the whole old loan plus the fees, and the bank would only lend against the extra value the house had gained. Less gain meant a smaller new loan. Too small, so the swap failed. Not because anyone got poorer, because the house got richer more slowly. The ladder did not need prices to fall, it just needed them to rise a bit slower, and the whole thing broke. The famous part, the falling prices, the man carrying his box out of Lehman Brothers, that all came a year or 2 later. That was the echo, not the cause. The loans had already failed back in 2006, at the top, while the news said everything was fine. It was never really about houses. People needed houses before 2008, during 2008, and after. Families were fine. The problem was the machine built on top of the families, because that machine needed one thing no economy can promise forever. It needed prices to keep speeding up, not just go up, speed up. Every year's number had to be bigger than the last, or the whole thing ate itself. Now, you have never sped up in your life. You have been beautifully flat. Your income in 2006 was sad. Your income today is sad, and that steadiness, Meerkat wants you to know, is about to become the most valuable thing you own. We will get there. First, watch smart people build the exact same machine again, on purpose, after living through the last one. Part 2. The Rebuild. Meet OpenAI, the maker of ChatGPT, the most valuable startup that has ever existed. Here is its price tag over about 2 years. Watch the shape, not the size. Early 2024, investors said it was worth $86 billion. Later that year, $157 billion. Then $300 billion, then $500 billion, and this past March it raised more money than any private company in history, $122 billion in one go, at a price tag of a cheeky $852 billion, run by people younger than your oldest grudge. Now the other side. In 2025, OpenAI took in about $20 to $25 billion, real money. 3 times more than the year before, but it still lost around $14 billion in that 1 year, and it has never made a profit in its life. So ask the simple question a child would ask. If a company burns $14 billion a year, how does it pay its bills? It raises more money. That is the whole answer. OpenAI signed huge deals with Oracle and Microsoft years ago, promising to pay for computing power. As each bill arrives, the next fundraising round pays it. And what makes new investors hand over the next pile of cash? The rising price tag. So the rising price is not a scoreboard, it is the income. Today's higher value pays yesterday's bill. That is exactly how the 228 home loan worked. New loan pays off old loan, same machine, new hoodie. And OpenAI is not even the biggest one anymore. This year, Anthropic, the maker of Claude, raised $65 billion and was valued at $965 billion. That is bigger than OpenAI, the most valuable private company on Earth, and it also does not make a profit. So now there are 2 of them climbing the same ladder, each one's climb telling the other the ladder is real. Why are the bills so huge? Because of how computing gets bought here. These companies sign deals that promise to pay for years of computing power whether they use it or not. Take it or pay anyway. And the companies getting paid, Microsoft, Oracle, Google, Amazon, write those promises down as future money in the bank. Signed, locked in. Oracle alone is now sitting on $638 billion of these signed promises, up 363% in a single year. Add the 4 big companies together, and it comes to about $2 trillion. And here is the cheeky little detail hiding inside. When you follow the paperwork, about half of that $2 trillion is owed by just 2 customers, OpenAI and Anthropic, the 2 that do not make any money. More than half of Oracle's whole pile traces back to OpenAI on its own. And these giants are not just waiting to be paid, they are borrowing against the promise. They take on real debt now, pour real concrete, buy real chips, and show those signed deals to lenders as proof the money is coming. Their building spend went from $150 billion in 2023 to over $400 billion in 2025 to about $725 billion planned for this year. And this year, for the first time, that building bill is bigger than all the cash these 4 companies make from their entire businesses put together. Google's parent company, Alphabet, spent more than it earned this year for the first time since 2004. So every extra dollar of building is now borrowed against future money, promised by companies that lose money today. That is the ladder. You are staring right at it. Quick pause. Why should you, a man whose whole net worth is a coat with a forgotten 20 in the pocket, care about Google's cash? Because about 40% of the S&P 500, the plain index fund your pension sits in, is now just 10 companies. And those 10 are mostly this one bet. You are not spread across 500 companies. You are not safe. You were told you were in the same gentle voice that once told you that you were big-boned. Almost half of your retirement is one bet that this ladder keeps climbing, and you did not place that bet. A fund placed it for you while you were asleep, which is the one thing you are truly good at. So the only question that matters is the 2006 question, not is this stuff impressive? It is. The question is, what could slow it down? And the answer showed up, right on time, from China. For 30 years, the story has been the same. In the 1990s, China took over furniture, clothing, and toys, and smart people said it was just cheap labor. Then steel and ships, a one-off, they said. Then solar panels. And today, China makes 8 out of every 10 in the world. Then batteries. Then electric cars, where BYD, once the student, now outsells every car company alive, Tesla included. Every single time the reaction was the same. Wave it off as a fluke, right up until the whole industry was gone. Nobody ever connected the dots. And now it is AI. This year, Chinese labs put out a wave of free AI models with names like DeepSeek V4 and Kimi K2-6. On several coding tests, they now beat the best American ones. They did not build them from scratch, which costs a fortune. They learned from the American models and copied the homework, the same trick that got you through school. And then they do the thing that breaks the whole machine. They give them away, free. Download it, keep it, run it on your own computers, no meter, no monthly bill, and nobody can switch it off. On a website called OpenRouter, where businesses shop for AI the way you shop for the cheapest funeral, Chinese models now get used more than American ones. A year ago, the American models had about 70%. Today, they are down near 30%. DeepSeek by itself is the most used one on the whole site, at a cheeky 1/7 of the price of the top American model. Now connect it to the machine. The Chinese models do not have to be better, they just have to be nearly as good and nearly free. And they are. That pulls some customers away completely and forces the American companies to charge less to everyone who stays. Both of those hit one number: the speed of American AI sales growth. And remember, the speed is the whole thing. Each fundraising round was 1.75 times bigger than the last. The next step everyone is counting on, going public at over $1 trillion, would be a jump of only about 1.25 times. The smallest jump yet. At the exact moment, free Chinese models are eating the growth. House prices in 2006 did not have to fall, they just had to rise a little slower. This is the same thing, only this time it is China doing the slowing. Part 3. The stack. If this were only about one industry and the rich people funding it, you could pour a drink and enjoy the show from a safe distance. But there is a third borrower here, and it is the biggest one that has ever existed. The United States government also spends far more than it takes in. Last year, it spent about $1.5 trillion more than it earned, and it covers that gap the same way any borrower with no profit does. It raises new money by selling government bonds to lenders all over the world. And here is the part that should make your tea go cold. America does not pay off its old debt either. When an old bond comes due, the government sells a new bond to pay off the old one. A cheeky $9 or $10 trillion of old debt has to be rolled over like this before the end of the year. The debt is never paid off, it is replaced. Sound familiar? The home loan borrower ran on rising house prices. OpenAI runs on a rising price tag. The US government runs on the whole world believing America will keep growing. 3 borrowers, same rule. The next check must always be bigger than the last. And these 3 are not side by side, they are stacked, one on top of the other. Belief in American AI holds up the American stock market. The stock market holds up the savings of the whole world. And the world's savings pay for the next round of government bonds that keep America running. All of this while the national debt has passed $39.9 trillion, and just the interest on that debt now costs over a cheeky $1 trillion a year, more than the entire US military. Pull out the bottom block and you do not get a wobble, you get a very fast day. Now here is the part that makes 2026 different from 2008, and it is the whole reason Meerkat put the paintbrush down. In 2008, when everything broke, scared money did something helpful. It ran toward US government bonds. The fear back then was pointed at the banks, and nobody doubted the government. So money ran out of everything else and lined up to buy those bonds. A long line of eager lenders meant the government could borrow trillions cheaply. The panic itself handed the government cheap money to pay for the rescue. Government bonds were the safe seat. But run the next crash and watch where the fear goes this time. A crash in AI is not a crash in a few banks. It is a crash in the belief that America owns the future. And that belief is the exact thing that makes the world keep lending to America. So this time the scared money does not line up for US bonds. Some of it walks away, to gold, to other countries, to anything that is not a promise. And a government that spends $1.5 trillion more than it earns cannot just stop borrowing because lenders got nervous. It has to keep selling bonds into a smaller crowd, which means offering higher and higher interest to get the same money. The safe seat of 2008 becomes the trap of 2026. Same building, the safe exit, and the dangerous one just switched places. Now Meerkat is always fair, and fairness matters here, because this is where the doom shouters online lose the plot, and Meerkat will not join them. First, the technology is real. AI is not a trick. People will use it before, during, and after whatever happens to the stock prices, the same way people needed houses right through 2008. Anyone arguing about whether AI is real is answering a question nobody asked. Second, none of this tells you when. The gap between the machine breaking in 2006 and the world noticing in 2008 was almost 2 years. Everyone who called it early looked wrong for months while prices kept hitting records. We can understand how it breaks. We cannot know the day. Anyone who sells you an exact date is selling you something. Third, these things can hold up far longer than they should, because a bubble is not a lie, it is a belief, and beliefs are stubborn. A fresh wave of real demand could still save the whole thing for another year of record highs. Meerkat is describing a real risk here, a big one, badly timed, not a promise that it happens. He is a small animal, not a fortune teller. So, 3 things to watch, and Meerkat knows exactly where you will be watching them from, because that couch is basically your home address now. 1. Watch the speed, not the height. The big numbers will look great right up until the last second, the same way house prices sat at record highs while the loans under them were already dead. Do not ask if OpenAI's next raise is huge, ask if it is bigger than the last one, and by how much. Going public at $1 trillion sounds like a party, if it is only a little bigger than the round before. The ladder is running out of steps. 2. Watch for one particular morning, the first time a giant company says it is cutting its building budget, and its stock goes up anyway. For years the market has cheered these companies for spending like mad. The day it cheers one for stopping is the day every other boss gets permission to stop too, all at once. That is not a slowdown, that is a stampede for the same small door. 3. Watch the price of insurance on the debt. When the smartest, most careful money in the world starts paying up to protect itself against a company failing, listen, it is already happening. The cost of insuring Oracle's debt has jumped to the highest anyone can remember. Its credit rating got pushed down to one cheeky notch above junk, and a famous investor who called the 2008 crash is posting his charts again and betting against the whole thing. He has been early before. In money, early is just a polite word for wrong, right up until the day it turns into a polite word for rich. And now the ending, which you have earned twice over because this whole story, all 3 borrowers, all $2 trillion of it, is about people who were allowed to borrow. That is the disease, borrowing. The power to reach into the future, pull money into today, and promise to sort it out later. It makes your wins bigger on the way up and your losses bigger on the way down, and every single character in this story is buried in it. The home buyer, the AI company, the most powerful government on Earth. And then there is you. You never got on the ladder, not because you were smart, not because you saw it coming, but because at every counter, every bank, every application, they took one look at your income, your history, and your general face, and said no, you were never allowed a 228. Nobody ever trusted you with a loan you could not pay back, mostly because they could not trust you with one you could. You have no price tag to protect, no round to raise, no debt to roll over, no promise that has to stay believed. You are the one person in this whole mess with nothing anyone can pull out from under you, for the simple reason that nobody ever handed you anything in the first place. You are not underwater, they never let you in the pool. And when everyone else is forced to sell, that empty, borrowed nothing life of yours turns out to be the safest place to stand. You are not out of date, you are just too broke to break. Frame that. Somewhere the bank that turned you down can see it. Meerkat is not telling you to buy anything, sell anything, or bet against anything. Meerkat is not a financial advisor. Meerkat is a small animal with a whiteboard, a tin of beans he has grown attached to, and a model railway with a tiny bank on the tiny high street that Meerkat has now, out of pure spite, shut down. The tiny sheep are fine, the tiny shareholders are not. So put the snacks down, go and look at what is really in your pension, and if you understand less than half of it, congratulations, you already know more than the people who sold it to you. Then sit back in your rightful seat and enjoy the one and only payout a lifetime of being turned down for credit will ever give you. Smugness. It costs nothing, nobody can take it, and it is finally, completely yours. Please do not sue Meerkat. Like, subscribe, and go check that nobody in your house is one missed payment away from becoming a tiny domino. It will not be you. You were never big enough to knock anything over. For once, be glad about that.